All right, ladies and gentlemen, we are officially live. Hello, hello, hello. Sorry, I'm late today. The computer was being annoying to say the least, but we are up. We are running. Hopefully, that infrared thing doesn't happen like it was happening a couple days ago. But we are here. We are live. It is July 7th, 2023. We are 7 days into the month of July. It is 9:25 a.m. and it is time to open up the market. I thought we were out of luck today. Nope, I am here. We are ready to go. Inbound, what's up? J Duff, what's up? Delty, Sonam, where were you last night? So last night I had a couple of things to do for my family, which is why I couldn't be on Finance Junkies. But the show had to go on. So Tanner, Chris, Matt, and Vitaly held it down. So hopefully it wasn't too bad. I was in the chat. I just literally couldn't be on the show. I'm still at home. I just had to do a bunch of things. So I was just like, it was the one night I was like, man, I just can't do the show today. So we are here. Ricardo just finished watching Finance Junkies last night. All right, awesome. Thank you for being here. Let's get into the market. We've got a bit of red. A bit of red. Let me share my screen right now. Definitely not the greenest day of the market. This is continuing the momentum of the red that we had yesterday. Why is that happening? Well, number one, it's Friday. Number two, private payroll data came out at 209,000, which was less than expected. In June, the consensus estimate was around 240, and it came in at 209,000. Unemployment rate was 3.6%, down 0.1 percentage point. Now, granted, unemployment rate is not at the 4.3% that the Fed wants in order to kind of justify their inflation targets for 2%, but it is still not the best given we added almost 500,000 jobs. So a little bit conflicting data, not, data that I think is going to destroy the markets, but the market, it was so funny last night, my dad was like, why are the markets down? And I was like, because we added jobs. He was like, what are you talking about? I was like, yeah, we added too many jobs. And my dad was just like, are you stupid? Like that's good for the economy. And I had to like literally, and after 5 times this week, he's like, I still don't get what you're talking about. And so like, it's hard for the average person to realize like, why are stocks going down if we're adding more jobs? But this is sort of the battle with inflation that's going on. So the private payroll data we got today, I guess the market was kind of in terms of how they interpreted it. And it led to some red, some green, but more red than not. We got Meta at 293, up a little bit in the pre-markets. Snowflake is up a little bit. Palantir is flat. SoFi is down at $8.07. ARK Innovation is at 43.53. We've got 2 minutes till the market opens, and then we'll see what impact is being done. Test Cap, thank you for being here. Kimberly Yoon was red, then green, then red. Market was confused. Yeah, pretty much. That's why we see a little bit of green in the pre-market as well. And then we see a little bit of red. S&P is at 438. So continuing the downtrend on the S&P 500, at least in the pre-market. The end phase announcement yesterday with the United States White House really meant nothing. It was kind of a nothing burger. It was just a little press release. They're investing $60 million. They did some press release with what I think Joe Biden was there, but yeah, nothing too crazy. Robinhood up 0.10% in the pre-markets. I mean, look, it's a Friday. Things tend to be sold off. It's July. The kind of sell in May, go away didn't really happen because we had a bull run. Maybe that starts to happen over the next couple months, and then September we get back to business. But overall, not been too crazy. Microsoft also down in the pre-market. The Qs are pretty much flat. They're not even down, really. All right, we got 40 seconds. Bitcoin remained at 30K, so Bitcoin's doing its thing. It fell to 29,000 last night, which it hasn't been to, I think, in a couple of days. So had a little random shock right back down. Where's Ethereum? Ethereum is 1,800. Ethereum is 1,800. I think it was at 2,000 a coin at one point in this bull run. So, yeah, I guess we're going to see where this goes from there. I'm interested to see what happens to SoFi. Interested to see what happens to Robinhood. Definitely interested to see if Palantir can hold these ranges. And, Meta is getting ready to crack 300. So it's just a matter of time when we see that happen as well. Or maybe it doesn't. We'll see. July 7th, 2023. Ladies and gentlemen, on a Friday, the stock market is open. Wake your ass up. All right, here we go. We got Meta at $292 is a green open for Meta. Palantir at $15.23. Palantir is a green open. Ethereum at $1,800. SoFi at $8.11. PayPal $66. Snowflake $173. ARK $443. A lot of green on these. SLG $29.82. Tesla $279. Tesla's been pretty good. It was stuck at like 283 yesterday. Now it's at 279. Really stuck within that range, which is very good. Up from the lows of 160 on May 4th. It is $884 billion in market capitalization. So a couple more dollars on the share price and we get to 300 billion bucks. S&P at 438, Robinhood at 1044, Bitcoin 30,000, Nvidia 422. Nvidia still holding strong in the 420 ranges. Enphase 162, Apple 191. Now again, a $3.01 trillion company, and Novix at $18.78. This guy touched 1931, now back down to the 18s. GameStop at $23. Again, that Fast Money movie or Dumb Money movie that's coming out, that could be a theoretical catalyst for GameStop. Now, do I think that the world bands together to screw the shorts over? I don't know if there's that much momentum. But I mean, people are definitely going to look into GameStop after this happens because there are still people that didn't know what happened in 2021 because, you know, they're not obsessed with the markets. Unity at $40, but that does not mean buy GameStop. That just means might be something there in terms of what people think, but I would not speculate on GameStop. Google at $120, Nikola at $1.30, Unity Software at $40. This one's actually down a bit from 44. So this one's got hit by the red. Shopify at 62, Zoom 64, Roku 62, Amazon 128. Andy Jassy gave a 1 hour long interview saying that people think they're behind in generative AI from Microsoft. And he says that we are just getting started and we are not behind at all. So it'll be very interesting to see their plans over the next couple of years. We talked about Amazon a lot last night on Finance Junkies on where AI is going to take their applications. NASDAQ 13,675. And we got Truist. Look at that. Truist at $31.31. Not bad at all. Not bad at all. Good morning to everyone who is here. Romania. Very cool. Thank you for being here from Romania. 4:30 p.m. This whole world didn't exist to me in 2020. No, I feel you, bro. I feel you. I mean, YouTube was a big part of me learning about just finance and stocks, and like the entertainment value got me so into it around 2019, 2020. So this world is very new to me as well, but it's been a fun world to dive into. And the good thing is, if getting into this world versus getting into sports, you can actually make money in this world. You can actually like become a smarter person. Whereas sports, you're kind of just like, me like team win, me happy, even though the team winning means nothing to you, right? Now, granted, everyone has their own escapes, but I just find sports a little bit of a waste of time versus something like stocks because there's just so much to get into. I've been watching so much Finance Junkies. My wife asks, "Are you hanging out with the fellas today?" I love it. I gotta take a picture of that comment. Let me take a picture of this comment. This is great. I love it. Okay, let's get into the suits. The mainstream dudes on CNBC and see what they are speaking about. See what analysis they've got going on. Keep going from there. You can bet on sports. That's true. You can bet on, I actually have a friend who has a pretty successful sports betting business. Yeah, I like literally I don't think he did anything in college or high school, but now he's making money betting on sports. It's just like it's like betting on stock prices and trying to have a price directionality on options or whatever. It's the same thing on sports. It's like, will this guy score 30 points tonight? And I guess some of the variables you use to decide if the guy's going to score 30 points is kind of similar to if, you know, SoFi will be $15 by 2025. It's a little bit more of a gamble, but it is possible. Let's take a look. Actually, let's get some Twitter meta updates because I didn't talk about it too much yesterday. So the updates on what's going on here, and then we'll watch this clip. Meta now has 60 million users. This is going to affect Tesla as well, I think, to an extent. This will be some of my analysis on it here, and then we'll get into the clip. Meta has 60 million users. Twitter has 250 million, the last known public number, daily monetizable active users. You could argue that got to 300 under Elon, but users, yes. Maybe they have 500 million users, but daily monetizable active users, I don't know if they've got 300 million. So Meta has more than 10%, close to 15% of Twitter's entire user base already on this app, on this thread thing. I've played with it. It's a really bare bones app. It's not that interesting to me, but nonetheless, it is there. Now, Elon is threatening to sue Meta for basically stealing some of his workers that he fired back in December to build this app. So let's take a look at this and then we'll get deeper from there.
Is threatening legal action against Meta over its new text-based social media app called Threads. The company accusing Meta of poaching former employees to create what it calls a copycat application. Joining us right now is Semaphore's Max Tawney, who first reported this story. Max, first of all, welcome.
Hi, good to be here.
So what happened? You got a hold of this letter. What did it say?
Yeah, the letter basically was written by Alex Spiro, who is Elon's personal attorney and who has done a lot of work for Twitter. Basically, the letter said, alleged that Meta had hired former Twitter engineers and staff to basically build this copycat app. And it basically demanded that Meta preserve all documents related to building Threads and former Twitter employees who now work at Meta and might have worked on this product.
Twitter fired half of the employees. Is there anything that would prevent them from being hired somewhere else after that?
Absolutely. That's a point that a lot of people raised after we reported the story yesterday. Part of the cost-cutting measures that Elon put in place as soon as he came in and bought Twitter was to, get rid of a lot of the engineering staff. Now, one of the other crucial things to keep in mind here is what Meta said in response to this. Meta said that this is completely moot. Because nobody who is a former Twitter engineer actually even worked on the Threads app to begin with. So,
by the way, guys, the market just reversed massively. I don't know what happened, but it's green. Palantir's at 1564, Robinhood at 1057, and Novix went to 19. Like, did you guys see that? There's just a massive green spike. We'll finish this and then we'll go back into the charts. But yeah, the market just went green.
So while Meta might have hired some former Twitter engineers and staff, none of them even supposedly worked on this product.
I guess I just wonder what that, I mean, Mark Zuckerberg tweeted for the first time in 11 years yesterday.
That's right.
Basically acknowledging that this was a copycat. He tweeted this picture of the Spider-Man and the other Spidey who looked just like him. So he's saying, yeah,
Zucks hasn't tweeted in 11 years, and that's what he tweets. That's kind of baller. I'm not gonna lie.
We are copying you. What is the legal framework for any of this? What are you allowed to do? What are you not allowed to do?
I mean, I've talked to a number of legal experts because I wanted to see, is this basically just tough talk from Alex Spiro, who is, a pretty accomplished but also aggressive lawyer, or was there actually, any sort of validity to this? And there's nothing that keeps you or prevents you from hiring former staff to work and kind of build a competitive app. And Meta has said in the first place that they built this off of the back of Instagram. They weren't trying to replicate Twitter, and that while they were maybe trying to take some of Twitter's audience.
I mean, they're clearly trying to do this.
Exactly.
But no question about
right.
But they were legally allowed to.
Right, exactly. But they were building it essentially onto Instagram. They weren't, which is why you were able to kind of, you get some of your Instagram followers and the like.
So Max, the story of the week.
Okay, so now what you guys might not know here is that, and then we'll get into the charts, Elon's threatening to sue Twitter over basically copycatting and making a Twitter app. Their argument is like the intellectual property, whatever, right? Meta bought $550 million of patents from Microsoft back in 2012. Now, why did they do this? Because Microsoft invested, I think, $240 million for 1% of Facebook in 2012, around that time. And so Meta, as a result, was like, hey, you have a bunch of AOL patents on social networking that Microsoft had bought, but AOL is not a social network. You guys aren't in the business anymore. You're investing in Facebook. Let's buy that off of you. And so the patents they have from Microsoft from back in like 10 years ago are like a news feed that connects with other events. They could literally countersue the crap out of Twitter, because everything Twitter has done is in violation of all of those patents that Meta has had for so long, which are like the most basic social media patents, and no one enforces them because it's like, you're not going to, like, you would have to sue every single app in existence, right? That's just not going to work. But if Twitter wants to go down this rabbit hole, Meta could go down that rabbit hole because they have all the patents. So I think, look, the lawsuit is a really bad look, in my opinion. It is a very bad look. And granted, I think I'm going to be on Twitter forever. I love Twitter. I think Twitter is going to win long term. I think it's going to thrive. But suing a competitor, like, that's your answer, is just like, it looks like you don't know what you're doing. It looks like you're scared. It looks like you don't have, arguments to make. It looks like you can't out innovate the product. And the product doesn't have any innovative features. So can he, like, it's just, I felt very weird for him to do that. Also, it also looks bad because Elon fired 80% of people. Where else were they going to go? The only other place those engineers could go to that was building something that needed their talents is something like a Facebook, right? And so it really looks bad for Elon here. I'm not going to lie, because there's no way in hell a lawyer is going to be like, yeah, you copied a news feed, you have to pay up. It's like, it's not going to happen. It's not going to happen. So overall, I think Twitter will be fine, but that is some of the drama that's going on right now. Now, 60 million users is no joke. The question is, can they keep coming back? And are they going to continue to use the product? And then can Meta shove ads in it? And to be honest, I don't know if there's a couple 100 million daily active users, but if they somehow get to like even 50 million daily active users a day using an app, you know how many apps would kill to have 50 million people on their product scrolling through ads all day? It could become potentially more of a business model for them. Palantir at 1564. Microsoft is down. PayPal, Snowflake, Arc, all these guys are up. So the dip got bought a little bit for some of these stocks. Tesla down just a little bit at 278. Robinhood is up. Yesterday, what did I buy? I bought SoFi options. I bought Robinhood options. I bought SLG, and I bought Palantir. So I got like one of each. I got one SoFi option, one Hood option, one Palantir share, and then one SLG. So not a crazy big buy, but I did buy the dip. Some of those red days, you just gotta buy the dip. We'll go back to the minute chart here. CLSK, this stock is also up 5%. This is a Bitcoin miner. It's a little bit of a Bitcoin proxy play. Let's go to CrowdStrike. Where's CrowdStrike doing? CrowdStrike's at 144. Netflix, how about that? Netflix is at 440, so it's down from 448 in the beginning of the week. And I want to see Palo Alto Networks. Palo Alto Networks is at 252, and then the other one is Airbnb. I want to see Airbnb. Who's long Airbnb? Is anyone here long Airbnb? I have never been a fan of this stock, like ever. I never got into it. And granted, I probably haven't even gone to the numbers. Price of sales of 10, market cap of 89. Do I feel like paying $89 billion a share? I think they're doing like $4 billion in revenue, something like that. They do like $1 billion a quarter. If you're long Airbnb, let me know. Is it worth a deep dive? Is it worth actually diving into? Is there anything important there? You need Amazon options? Bro, I need money. That's what I need. You're talking all those options I bought were back in May when I had some capital. So adding to it is just like with the little money I have. Amazon options are going to be a little expensive. I like Airbnb, but did not like the stock. Yeah, I agree. Airbnb to 25, or I don't know if it goes to 25. But man, I just never got into Airbnb. Never got into it. Meta has mastered copying other competitions. Guess they know what they're doing. I agree. And look, some artists are innovative. Some artists just steal. And there's nothing wrong with either. But you got to be good at what you do. And I think Meta is good at what they do. They know how to steal and get shit done. And it's just that simple. So, like the implications that it has on Tesla is, I mean, look, if Facebook ends up really building a product that is so good in comparison to Twitter, that Elon has to lose sleep at night over this, because Elon didn't sleep for the past 6 months. He finally got Linda Yaccarino. They got some things going. Things were all right. And then Zucks drops this on his head. If he legitimately is losing users and attention and revenue, because the other thing about Meta is they know ads way better than Twitter. So imagine they get this bad boy to 100 million monthly active users, not daily, but monthly. And then they start shoving it with ads, and the ads are actually good because first of all, the ads will be good because it'll be your Instagram data. You sign in with your Instagram account. So all the data they use to target you already is just going to be the same exact thing with Instagram. So, I mean, the ads are going to be way better than Twitter. I'm calling it right now. The ads are going to be phenomenal on that product. Will they perform as good as Instagram? Probably not. Will they perform better than Twitter? Yes. Because Twitter ads, they're just not the best. Also, the other problem is Twitter has dropped the ball on a couple things. Number one, I've had Twitter Blue for a while, and I still haven't been approved for Twitter subscriptions. So like it's been like almost a couple months, and Twitter has not approved me to be able to get like $1 a month from my subscribers on followers for like subscribing tweets or whatever it is. So like I'm sure if they haven't done it for me, they haven't done it for other people. Second of all, Twitter said they were going to start paying creators. They had a $5 million payment fund that they were going to give to creators if people scroll through ads in the replies of your tweets. They haven't done anything for that. And so they've dropped the ball on a lot of key features the only feature they've added over the past 6 months was the view counter, which is a good feature, but they really haven't done anything else. I mean, like literally nothing else. And so when I'm looking at Twitter, I'm like, yo, you guys said you promised a lot of stuff. You've done pretty much nothing. They restored freedom of speech, Palantry at 1575 now, which is great. I love it. But, we got to get to Meta. I don't think will drop the ball on those features. Now, will Meta pay creators? Probably not. So it'll be nice to actually get paid by Twitter. But Meta's ads will be better than Twitter, and that's going to be pretty bad. And it looks like he's wearing a bunch of Orbeez. That's funny. Means Twitter will be improving. Hopefully, man. They haven't improved at all in a while. Like, I think they need to. He said he's not doing ads on Threads. So yeah, sure. You're not doing ads to 1 billion users. It's going to take 5 years to get 1 billion users, and they're going to do Threads. I think if they cap out at 500 million, 600 million for like a couple months, they're going to do some fucking ads. They are not going to justify running that app as a loss leader. I think that whole 1 billion thing is BS. Now, granted, it's the right argument to say, hey, we're not going to do this till we get 1 billion, but I think they're going to do it as soon as they can. They need the money. They also want to kill Twitter. That's their argument. Twitter allowing users to simply block companies that have ads is an issue that they'll need to resolve. Yeah, that's also true. I mean, look, Twitter has a lot of issues, bro. And I love Twitter. I'm a power user of that thing. I love this Twitter thing. Let me put my Twitter in the chat. I love Twitter. But Meta is being an animal here. Threads is like my Indian family WhatsApp chat on steroids, like a huge group chat with IG mutuals. Well, that's the reason I don't either. Oh, I have a funny story on this, brother. So let me create pack. Basically, that's what I said a couple days ago. It's like following my close Instagram friends. I want to be a different person on Twitter, and like trying to get them to be part of my Threads persona. It's like, no, I don't like that. I want to talk about investing, and none of these guys care. Like it just feels weird. However, I was with my sister yesterday. Okay, we're on the couch. She's an Instagram power user. And I was like, yo, have you heard of Threads? And she was like, what's that? And I was like, Instagram made a Twitter app. And she's like, what the fuck? Why? And I was like, just download it, see what it's like. I was like, what is it? She's like, what is it called? I was like, it's called Threads. And she was like, so I'm going to like thread something? I was like, yeah, it's like you tweet something, you thread something. And she got so pissed off. It was hilarious. She's like, why do these companies have to just like be so annoying? Let Twitter be its thing. Why are you trying to make words go viral? Like, it's so annoying. And I was like, all right, just try it out. So she downloaded it. And I was like, did you sign up? She's like, no, I'm not signing. She was like, she had such a hostile reaction to it. And I think she is the majority of people on the planet. They don't care about tech. They don't care about stocks. They don't care about investing. They literally just like check Instagram for their friends, right? And so she was pretty much like, why would anyone join this? So 60 million people joined it. And you could argue these are 60 million people that want to have personalities, brands, celebrities. They want to gain a following, all that stuff. I don't know if the average person much less downloads it or even checks it on a day-to-day basis, because again, on Twitter, you have to have a unique community of content that you ultimately create in order to find value in it. Whereas Instagram, the reason there's 2 billion people is because it's your friends, and everyone has value in their friends. And so again, I think they're trying to make friends talk all day on Threads. And I don't think friends really care about spewing their random thoughts. They definitely care about the selfies. So I think it's going to be a little bit harder for them to be able to get there. But let's see. Let's see if they do it. Okay, let's get into one more of these clips that I wanted to click on and check out, and then we will go from there. Okay, this is a little bit more the AI arms race. Let's hear what they have to say about AI stocks, and we'll go from there.
Take on big tech in the AI arms race is Paul Meeks, independent solutions wealth management portfolio manager and finance professor at the Citadel. I was always blown away by putting 3 words into Google to see what it comes up with. I can't imagine. Isn't that AI? Paul, isn't that been around for 30 years? We had the creator and founder of Waze, and he said, I sold my AI company 10 years ago to Google. Waze, which was AI. So what happened? How do we cross over into this new era? It was ChatGPT, I think. It was telling it to write something, and people can't believe they might not have to do homework ever again. Is that what got us to where we are?
Yeah, when we really emphasized generative AI back last fall, right, when OpenAI really as far as commercially, pressed pretty hard on ChatGPT. It caused a new paradigm. But you're absolutely right, Joe. We've been talking about this, and companies have been talking about embedding AI functionality into their whole product suite for years. And so I really liked the interview yesterday that you did with Andy Jassy. And I will tell you, I completely agree with what he says. We're in a hype cycle, and all of the tech majors, including Amazon, will get to the substance before too long. Tech companies will distinguish themselves not by having AI, that'll be everybody's oxygen, by the companies that actually don't jump on this bandwagon. Again, a lot of hype. It reminds me very much in the late 90s and early 2000s about all kinds of companies, technology or not, claiming that they were .coms. And then, what happened was, the internet became a really big deal. It changed everything. But a couple companies really exploited it. And a bunch of companies that claimed that they were .coms back then are no longer in existence today. I see this.
Having said that, let's look at Andy Jassy say what his AI strategy is.
What is the possibility, the likelihood that you're going to spin out AWS from Amazon? I mean, Lena Khan would like it.
John, when we're 80, we get a drink together. You're going to be asking me the same question, whether or not it's relevant or not. But I don't have a new answer for you. We don't have any intention or plan to do so.
So in the AI era, why in particular? Is there a different kind of benefit that you get from having the e-commerce business and the cloud business in the same structure? I mean, I know that the profits from cloud, from AWS, certainly help. What about the artificial intelligence angle?
I don't think the artificial intelligence angle changes, how you're structured as a company. Every single business unit inside of Amazon is working intensely and very broadly on generative AI. And in fact, in many ways, sharing what we're working on and what we're learning and ways that we can be more effective for customers and models is very useful across different departments inside of Amazon.
Okay, so let's talk about it.
And again, he's right. Them incorporating generative AI to make the existing products already more efficient is something I don't think we give Amazon enough credit for. Just the advertising alone on search is going to be really good because, again, they don't have to worry about giving some generative AI answer. They still have to show a product, but the level of efficiency and specificity, they'll be able to show the right product, even if it's sponsored, which is different than Google and the blue links, actually can give Amazon a bit of a more of a moat that they already did $40 billion in trailing 12 months for ad revenue.
AI, because I'm not going to, you guys haven't exactly been quiet about it because you've been talking about AI for a while, but your rivals, particularly, Microsoft, Google, have been louder. So Adam Selipsky, who's now heading AWS, post you said, well, this is just the first 3 steps, right, of an AI race. So don't pay too much attention to that. But you guys are the first movers in cloud, and you're still ahead. So there's the risk that because you're not the first mover here, at least in this AI hype cycle, that you could get behind?
Well, I mean, hype cycle is pretty different than substance cycle. And so, to me, I think Adam's right that we're just a few steps into a marathon here. To me, I see generative AI as one of the biggest technical transformations in our lifetimes. And I think it has the ability to transform virtually every customer experience that we know. I think most people are focused on the applications, things like ChatGPT brought everybody's awareness up. But I think of generative AI as having kind of 3 macro layers. And I think they're all really big and important. At the bottom layer is the compute that all of the machine learning training and inference, which are the predictions from the models that are going to be run on. And what matters in that compute is the chip in there. And to date, there's really been one chip provider, which is, the supply is more scarce and it's expensive.
You're talking about NVIDIA.
And it's why we've invested over the last few years in our own customized training chips that we call Trainium and inference chips that we call Inferentia, which will have much better price performance than you'll find anywhere else. We're on the second versions of those chips, and we're quite optimistic that a lot of the machine learning training and inference will be done on AWS chips and compute.
All right, Amazon, maybe you'll make some money, but for right now, at 9:54, July 7th, you guys aren't the most important anymore. You were important in that clip, but you're not important right now. What's important right now is Palantir is at $15.81, up to 4.5% on the day. Do we hit 16? We got to 1590. That was the top. 1590. Do we hit 16? Do we get back to the beloved promised land? The place where you have a party with all your friends, Sweet 16, the coveted spot in the NCAA tournament, Sweet 16. Do we get back to that juicy Sweet 16? I think I was, how old was I? I was 16 when I had my first kiss. Yeah, it was 2012. No, I was 15. I was 15. So it's man, I wish I was 16 now. It was 2012. It was freshman year of high school. I was born 97, so 15 years old. Regardless, let's say I was 16. We need to get back to 16. It's been too long since we've seen the 16s. So everyone needs to buy a share of Palantir right now. Collectively, the whole chat, 422 people. We will do it. We will all this drama for a flat month. That's basically, this is basically, bro. That's literally the stock market. We go up, we go down, we go up, we go down, and at the end we just end back at normal. It's like day traders who do all this shit, and then they're like, they can't beat the S&P. It's tough, man. It's tough. Stock market's tough. Stock market is tough. I was 13 freshman year. That means you were born in, well, no, I don't know what year that means you were born in, but okay, not bad. I was 15 too. Cheers, Amit. Glad to know I'm on a par with a hunk. Some people say 15 or 16 is kind of late for your first kiss. Bro, the real first kiss story. I tried to have my first kiss when I was fucking like 13, and I remember that shit failed so epically. It was hilarious. Maybe I'll tell the story one day. It was very hilarious. But yeah, 16 was when we got the job done. What software is this? Is Webull. Webull. It's free. Webull. 1579. No, why are we dropping? Come on, Mr. Market. Stop being so annoying. SoFi at 824, Meta 290, Airbnb 130, ARK 44. I'm thinking a little bit more about ARK G. This is something I don't have any exposure to and I want to have exposure to because I don't want to figure out which genomic stock wins, but I do think genomics as a sector will definitely win. And I think maybe a long-term position. This should be one of the ETFs. I have at least $5,000 in over the next 10 years. I mean, I am a big believer. I did a lot of research for genomics when I was researching Ginkgo Bioworks. Don't have a position in the company anymore, but I did a lot. Like I watched a lot of podcasts. I tried to understand a lot about this space, and it makes sense why this might be one of the best performing ETFs that Kathy has, to be honest. So that one got to look into a little more, but it's been flat over the past year. Palantir now topping at 1578. It gave us top, but not the top we wanted. No, ARKG is trash. Really? I don't think ARKG is. I think CRISPR. I think DNA, NVTA, Exact Sciences. I don't know if those are horrible companies. What about ABCL? I haven't deep dived into ABCL. I know Chris is bullish on it. I just haven't deep dived into it, but probably does warrant a deep dive eventually. Huh. Yeah, Palantir seems like it's going down just a little bit. Robinhood at 1071, not bad. We got to get Robinhood past 11, bro. We got to just get past this 10. It's ready to, look, this next quarter, bro, if we show gap, we're 3 cents away from gap. If we can get 3 cents, if we can just become gap profitable, oh my gosh, this ticker, this is going to be fun. And I saw an Instagram ad for Robinhood yesterday. They're starting to advertise. And why? Like, I have not seen them advertise in years. The reason they're literally years since 2022. The reason they're advertising is because they're trying to get those users back, and they know this is the right time to advertise. It's so funny. Like, my thesis was that when the bull market happens, Robinhood's going to explode. And the next thing you know, they're advertising. And I'm like, this is just hilarious. It's like they know the thesis is also the same, that when the bull market happens, they need to have a crap ton of users. So the cost per acquisition in terms of users is actually going to be worth it when you get into a bull run. So it makes sense. What do you think about Palantir valuation right now? And what are your thoughts for next earnings? I think valuation is a little bit overvalued given the growth rate, but I think the market premium we're getting is fine because the growth is going to be up there. Thoughts for next earnings? I think Q2 is going to be good for customer count, not good for revenue growth, which is fine because I think the market, if it's smart enough and if it gives us a dip on that news, I will gladly buy that dip. But I think if the market's smart enough, they'll be like, oh, the revenue's not there yet because Palantir recognizes revenue about 12 months after they get a client, but the clientele is there. And if the product is good enough to close the clientele, then the revenue will eventually be there. So it'll be a dip absolutely worth buying at the time. But yeah, we probably don't get Q2 revenue to be good. It's spelled Webull. I'm putting in the chat. It's Webull for those that are looking for the software. Webull. ArcGIS Teladoc in it. Okay, yeah, I don't like Teladoc, but hopefully they have enough other companies to outweigh some of the bad companies. Almost everyone since the invention of biotech loses their shirt on biotech. Yeah, I've been through some bad biotech. I'm still holding a biotech from 2020 that I thought was going to go to the moon, and I'm still holding it because now I think that so the biotech that I'm in, it's actually kind of insane. I've been through a reverse split. I've been through share dilution. I've been through hell and back with this company. Like, this was my first introduction to the stock market. Like, this is like what it means to be an investor, right? You got to deal with some of this crazy shit. They have had data on an oncology cancer drug that is being used at the University of Texas, MD Anderson. If anyone knows anything about life sciences, MD Anderson is the most prestigious cancer research facility on the planet. They initiated this data in 2020. And it's been almost 3 years, about to be 4 years. They haven't released the data. And so in my opinion, this is my hopium, my tinfoil hat, that them not releasing the data. By the way, they've done a ton of business changes. They have a scientific advisory board. They brought in all these business directors. Like, they've done all this business stuff, but they haven't released the fucking data. And I'm like, if it takes you 3 years to not release the data, I mean, you're like, legally you have to say if you failed or something, right? Like, you can't mislead investors and say, like, so if MD Anderson is still using their drug and it's been 3 years, I think the data is good. And I think when it does come out, I think right now what's going on with the stock is manipulation, and that's my hopium. But when the data comes out, I think it might be crazy. But you never know when it happens. You never know when it happens. He's talking about Purple Biotech. Yeah, I'm talking about PPBT. But again, don't go into this stock. I mean, look, I'm in this stock because I'm bag holding. I have my averages at $5. I'm bag holding a lot. So if it does happen, it'll be amazing. But the broader chances are that nothing happens. And so now, again, the due diligence I've done, I think, is legit, but nothing could happen because this is one of those stocks where I bought it off of random naivete in 2020. And I think I lucked into it being a decent stock with a lot of due diligence. The drug still has to win, right? So if the drug doesn't win, I'm screwed on it. But if the drug wins, then you never know. And even if the drug does win, then they have to negotiate a buyout or a deal or a partnership. So there's still a long way to go on that one. It'll be dead money for a while. But I'm in it. I've been in it for a couple of years. So I'm like, all right, I'm going down with the ship. I'm definitely not selling now in case something good happens. So we'll see where it goes. You SOB, I'm in 10 more $10 hood calls. Hey, man, I'm telling you, I got these hood calls when they were so freaking cheap. That was one of the best things I did this year on my own. I was like, look, this is cheap. I'm going to pull the trigger here and I'm going to make some buys. Yeah, look at that. I am up currently. Let me just show you guys. This is my hood. We are up 14 hundo on that. 14 hundo right there. I actually have 10 more on a different one. This one is up $270 though. So we're up 1,600. Before it was up like 2,000 at one point. But yeah, this is a good one, bro. I got this one cheap. Now, as long as Hood does what it needs to do and it doesn't tank on earnings, then it'll keep going well. But if it tanks on earnings, then that'll suck. Follow Mitt at your own peril, not financial advice. Yeah, I mean, look, I've said many, many times, do not invest in the crappy buy. I don't even talk about that biotech. Like, it's just some of these stocks, I'm pretty sure people relate. You've been in them for so long that only you know how much conviction you have, even though they're shitty companies, but you're not going to sell. It's like kind of with Vitaly with Arcimoto, but eventually that one just ended up being too shitty. Sometimes you just go down with the ship. And now I'd rather lose all the money I have in that stock than sell it and then they get bought out for like whatever, $40 the next day because they actually did have a drug that was working for so long and my tinfoil hat theory was correct. It's like I'd honestly rather lose the money. I don't care about the opportunity cost. I will not go my whole life in regret knowing I held for 5 years and when it was time to cash out, you sell for any opportunity that probably wouldn't have 10x on you like that drug did. So we'll see. Sunk cost. Oh, it's absolutely sunk cost fallacy. No, but the thing is, I'm not DCAing into it anymore. I'm not DCAing. So I don't put any new money into the company. Like I have a position, it's there. And if it goes to the moon, great. If I break even, great. If it all goes to zero, which I don't think it'll happen, but if it does happen, then I'll deal with it. I can afford to lose it. But yeah, I'm definitely not DCAing into that. You just bought tears to my eyes, FUV. Tally, we got to celebrate the losses and the wins. We got to celebrate them all. Pouncer just posted a new. Oh, I forgot about that. Wait, really? Okay, let's watch that. They posted a video about the hospital stuff yesterday. I didn't know they posted a new video about Ukraine. Did they? We'll watch it together. Did they actually? No, they didn't. This is about the Tampa General Hospital. They didn't. What new video you're talking about war fighting in Ukraine? Or at least I didn't see that. Amid guess on Pouncer revenue growth starting Q2 2024. I think, if we can get back to 25-30% revenue growth, that'll be the best. So we got to see if that happens. 25-30% revenue growth. Amazon calls better than Robinhood calls. I don't know about that, guys. Like Amazon's a good long-term bet, but do you think in Q2, Q3, they're going to just, again, Robinhood is set up to perform in 2024. Amazon, I don't know how much it's set up to explode in 2024. Remember, Amazon still has to get profitable in the retail business. They have to show declining capex to be able to boost their free cash flow. It's a great long-term bet, but also, why would you buy options on a company that's up how much in the past? Like, you don't buy options on, that's like 101, right? Like, I'm not even, like, why would you buy options on a company that's up 50% year to date? No, Vitaly, shame on you. You shouldn't be, you don't buy options on an underlying asset that is up that much year, because then it has to perform even better for the options at this price to be valued more. Robinhood was basically flat on the year, or maybe it was up like 1%, 2%. That's why the options actually made sense. Options don't make sense on Amazon right now. Now, granted, Amazon could blow it out the water in the next earnings, but if you assume Amazon has relatively decent earnings, the market already gave it a 50% boost since the beginning of the year, which is amazing to be up 50% on a stock in the beginning of the year. But I don't know if options are the best ones right now. Thought you make money on options if things go down to, yeah, if you short it then yes, you can make option. You can buy puts, you can make money going down. You can make money up or down, but it depends on the ones you do. He's so wrong. All right, Matt, buy your Amazon options when the stock is up 50% year over year or year to date. Go ahead. Have fun with that. Because even the break even you're going to need on your option is already going to be another 15%, 20% just to break even on the option. So go ahead. We'll see which ones do better, Amazon options or Robinhood options. Now, again, Amazon's going to be good long term, but I think for the rest of the year, I don't know how much Amazon really performs for the stock to get that excited. Even if it gets to 160, I mean, like it's I don't know if that's adding $30 of share price to $1 trillion company is not the easiest in the world. Not the easiest in the world. Amazon is a major buy. I agree. I don't know if the options on Amazon are a major buy. I don't know. Does it make sense to buy options when the underlying security has already run so far? Yeah. I mean, like, look, I'm not an expert, but Kunal, that's like, you get my point. Like that's why I bought the Robinhood options. That's why I bought the SoFi options, because it was at 470. I bought the options when it was at 570. So it was up just a little bit from that 470, but then it proceeds to go up to if buying options when SoFi is $10.14 or $9.30 makes no sense, because it is up it's up more than 100% from 470 on the lows. You get the options when the shit is like barely up or you see it starting to go up, but not when it's exploded already. Hood has 10x more risk. Amazon is much better risk and reward. Well, that's a question of due diligence and research. That's not again, you're thinking Hood is a long-term investment for me. To me, it's a trade for the next couple of years, which is fine. Obviously, Amazon is a better stock investment than Robinhood. But in terms of the options on Robinhood versus Amazon, I don't know if Amazon's the better risk reward from an options perspective. I don't think so. But I mean, we'll see. We'll see what happens. All right, let's take one last look at the charts, and then we'll be done for today. It is Friday, July 7th. I hope everyone is having a great Friday. I hope you had a good week. ArcG at 33, Airbnb 130. Where did Palantir go? Did Palantir drop back down? Palantir 1572. So still not bad. It's a nice little green day for Palantir on Friday. Not bad. We'll see if it holds up. SoFi 818. Snowflake 175, PayPal 67, SLG at 30, Tesla 277, Bitcoin 30,000, Nvidia 427, Inching 430, S&P 439, Not bad. S&P holding well for the week. Let's go to NASDAQ. NASDAQ started this week at around 13.5, so 13.7. Not bad. Not bad. NASDAQ on 13.7 and Robinhood at $10.72. All right. Palantir, I guess, is the great winner of the morning, up 3%, 1570. Not too bad. Everyone join the Discord that Vitaly put in the chat. It's the Freelance Finance Discord, kind of like a Finance Junkies Discord too. But yeah, you should join it. They post all their trades, all his Amazon charts, all that stuff. So make sure you definitely join that and check it out. And yeah, make sure you click verify when you join to see all the channels. The Discord is really good. Awesome. Yeah, the Discord is definitely good. I'm not as active in it because I'm just super busy throughout the day, but I'm in the Discord as well. So I'm there responding, checking out stuff. Are you implying stock market goes down on Fridays? Yes, because people sell off for the weekend. So that tends to happen, but it's not too bad today. This is Junkies Have a Live every night, Monday through Thursday and Sundays. All right, that's it for me. Thank you all for being here. This was a great market open. I hope you guys enjoyed. It's Friday. I got to go do a lot of work. Do I have any plans on the weekend? No, pretty much Saturday I'm at home doing work. Sunday I'm at home doing work. Nothing too crazy. We'll have Palantir Weekly and SoFi Weekly tonight. We will have a lot to talk about in SoFi in terms of its new investment platform update, UI, and its investor updates or Q2 earnings coming out in July 31st. So we'll talk about that. And on Palantir, we have a bunch of stuff to talk about. So we'll talk about that stuff as well. Cost base is $99 on Amazon. Perfect. That's awesome. Congrats, Real Baby Pluto. That's awesome. All right. That's it for me. Do you ever take days off? Well, we don't do a podcast on Friday for Finance Junkies, and Saturday is the one day I don't go live at night. So so that's the one day of the week I don't go live. So yeah, that's the day I take off. Got to keep working. Thank you, everybody. Have a great weekend. See you tonight. Bye-bye.